Okay, well, hi everyone. Happy Friday. I feel like I'm at an annual conference. I'm looking out over this room. It looks like 2,000 people are here again. So happy to see you. So pleased to be here. And so glad that you all have stayed for this closing plenary session on AI and clearly the implications for the CDFI industry as well. So I am thrilled to be here with the panelists who are here today, and I'm going to just introduce them very briefly. We have a number of questions that I'll pose to them, and they'll, of course, respond to, but clearly this is a conversation as well about AI and technology. And it's often viewed as the new frontier of technology. And how do CDFIs need to think about this, incorporate it into their business models? What are some of their challenges and opportunities as well? So I'm going to start with just, again, very, very brief introductions, starting with my left with Kelly Cochran from Finrig Lab, Matt Roth, who's with the Community Reinvestment Fund USA, and finally Sandy Hernandez with MasterCard Center for Inclusive Growth. Welcome, everyone, and thank you very much. So, I'm going to be the first one to tell you that technology scares me. I try to embrace it. I keep telling myself that it's my friend, that I need to really be much more open, but there are so many questions that I have about even my own CDFI and how we need to think about it. So I'm always open to hearing from others who've worked in this industry for a very long time, certainly see the benefits of it, and we'll talk about the benefits today. So we're going to start with Kelly with the first question. I'm going to put this aside because there's a lot of background noise there. So Kelly, how do you envision AI transforming and being kind of this transformational leader regarding the operations and services of CDFIs in the next few years?
Well, thank you for the question. So Finrig Lab, we're a nonprofit research organization. We focus on the use of data and technology for financial inclusion. And so we're thinking a lot about machine learning and AI. I think one thing that's helpful to start with is just what are we even talking about? Because there's a lot of different flavors here. Artificial intelligence is a pretty general term. It's talking about using computers to do tasks that historically have required human intelligence, but there's a whole lot under that umbrella. Things like image processing or natural language processing, predictive models, and then generative AI, which is kind of the new thing on the block, where ChatGPT and other functions are generating images, generating language, kind of predicting models. So some forms of AI are here. They have been used for a long time by CDFIs and other lenders. Things like your fraud models, where you're using OCR, potentially. Some of your back office operations and vendor work may include some forms of machine learning, not necessarily generative AI, that's still pretty new. But what we see going forward is the potential for some of these technologies to have bigger effects. Not just efficiencies, which are important and can be really valuable for organizations that are trying to stretch their impact as much as possible, but also things on the inclusion side, for instance. So one of the places we've spent a lot of time is thinking about the potential use of machine learning in underwriting models, where the machine learning analytics are a little more sophisticated than the kind of traditional regression models that people often use in prior generations of automated underwriting. And what they can do is kind of pick up more nuances in the data, which is potentially really valuable, particularly where we're talking about borrowers who may be difficult to assess using traditional metrics and traditional data sources. So that's really encouraging, but it needs to be modeled and thought about very carefully because these models can be a little bit more complex, and we need to think through things like fairness and explainability, reliability, and so on. And then with generative AI, which is, like I said, the new kid on the block, there's all sorts of speculation about where we could go with this and what it could be used for. And it is starting to be used in really limited forms for things like employee assistance to help employees get to information they need more quickly. But putting it out in the front of customers to use, kind of really sophisticated next generation chatbots, for instance, is much more complicated because there's a lot that we're still working through with this kinds of technology in terms of it, because it's generating answers, not just leading the consumer or the borrower to something that's already canned. The question is it accurate when it's generating? In some cases, it will hallucinate and generate an answer that's not correct. So that's why those kinds of uses, while they could be incredibly helpful in the long run for things like technical assistance and financial advice, are still a ways out in time. They're not a 1 to 2 year option. So what I think we're going to see is more growth. It's going to continue. Lots of vendors are thinking about different ways to incorporate it for different purposes. But some of these bigger things that are getting a lot of attention are farther out. There's a lot more to go in terms of the technology and our ability to manage it before that's going to really be ready for prime time.
That's great. You talked about clearly the growth that's taking place now, and certainly what we need to anticipate. I said that I'm afraid of technology, and yet I embrace it because I know that it's here. There's no way for me to avoid it. But for the CDFIs that are in the audience today, what are some of the practical steps that you would offer to them on ways in which they can integrate AI into their operations and their processes?
So I think there's a couple of things that are important to start doing, and obviously a lot of this is about vendor management, because this isn't something that someone is necessarily going to go build a machine learning or an AI model for themselves. That's a big technical lift, and most CDFIs are not in a position where that's where they're going to want to spend their resources. So the first thing you can do is really start thinking, learning about the different types of machine learning and AI so that you can ask intelligent questions of your vendors. And there's some hype. There's not a precise definition, and sometimes we see people getting really excited about the long-term potential, and so you have to really kind of work and ask good questions and think about it. The second thing that's really important is to think about the data you have as an organization and how you can potentially leverage it over time. So for instance, I talked about using machine learning models to get more signal out of the data. But that really depends on having that data organized, structured, you know that it's accurate, and you know what you have, and that it's ready to be used and analyzed by a machine learning model. So that's a really important step up front that the lenders can start doing now to prepare so that when the right time and place comes, if they want to use these kinds of models for different things, they have the data that's ready to go to kind of gather those insights. And the last thing I think is just really important is really be on the lookout for resources. The sector, every single CDFI trying to figure out this space for itself is incredibly efficient and hard. And I think that's a broader question that we see all the time with technology adoption is how can you leverage intermediaries, peers, other organizations so that you're not starting from scratch on this and you're able to learn from what other folks have gone through and benefited. And we're thinking about additional research that we can do in this space to be helpful because I think it's going to be an ongoing drumbeat. There's hype cycles that kind of go up and down, but it is progressing. And so it's a place where people will want to get up to speed and really understand what it has to offer their organization and when it's worth the time and effort to kind of put something like that in place.
And not to put you on the spot, you talked about that vendor relationship and some of the questions that you need to ask the vendor at the outset. What are one or two questions that you think are really critical?
Well, I think one question is, ask if they are using machine learning or AI and what they're doing with it and how it works. And that's the starting place. Like I said, there's so many different flavors here, really understanding what you're talking about. And if somebody starts talking about generative AI, I would definitely ask more questions in that space because it is so new and people are still figuring out how to use it. And then, from there, you want to ask questions about how they're managing it, how they're testing it, how they're making sure that it's reliable and kind of fit for the purpose that they're using it in their system. Those are all important places to start. And to the extent that people are starting to think about using this in machine learning underwriting models, our website, we have lots of resources on some of the questions that are coming up in that space about how do you manage these predictive models, questions that people need to think through. So in different places, there may be different questions. You really have to think about what's the use, what's the risk, what's the benefit, and then just kind of work through the process from there.
That's great, thank you. Matt, you're up next, and I know that CRF has had a great usage of AI and technology over the years. So here's my first question. What strategies have you found effective in fostering a culture of innovation within CRF? Because of course it starts at the home base, right?
Yeah, thanks Donna, and thanks to Harold and to Seth and the OFN team for bringing us all together. And I can confirm what we all heard yesterday. If you're up here, it's like impossible to see any of you. The lights are just really intense. So look, what had me so jazzed when I got this gig 15 months ago and still has me jazzed today is that we have at CRF a legacy of innovation. We were founded as an organization to do new things for the sector. Right, we bought loans from what were then CDCs and we packaged them and had balance sheet relief and sold them. And then we ended up getting those securities rated and having a real securitization secondary market. And that spirit of innovation drove through our initial NMT, new market tax credit work. You know, I think most of you know we're one of two CDFI along with OFN, qualified bond issuers at BGP for a bond guarantee program. What was then really exciting, and I'm going to go deeper on our tech side in a minute, but what was also a really exciting opportunity coming in was to think about extending, right? Because then we, in the 2010s, since we've really built out a really robust set of tech platforms, which again I'll talk more about under Patrick Davis's leadership, who's here, and then the opportunity was also in the spirit of like really building on the culture of innovation. Is thinking about, you know, at the time, we were a 7A lender, and that was the toolbox. We really didn't do anything other than that. So we announced last spring that we're going to create a vertical around small business lending, because if you're a CDFI, and to be real, like we're sitting on 50% net asset ratio, we have money we can move, and if we're going to be in service of, for us, small businesses, we knew we had to move capital. And so step one, couldn't have gotten more fortunate than also here, Alexis Dishman, coming on board as our Chief Lending Officer, and we promoted Kinfei Arga as our Chief Credit Officer. And they have already moved. We've closed or approved and about to close non-7A loans across 6 different programs. And this is pre-shipment finance to diverse supplier chains, diverse franchise owners. It's in partnership with our colleague micro-lending CDFIs, direct loans to them and participations to free up their balance sheet. So we're really doing some innovative stuff, a new revenue-based financing product that we launched in February and closed a $1 million loan. So we feel that the urgency of using our place in the sector, as all of us are here, to drive innovation and try and do the next thing to reach more small businesses and get that capital where it needs to go. So I'll stop there on that piece.
No, that's great, Matt.
Yeah.
So much of the work that you all do, you're also ultimately looking at how do you meet the needs of the entrepreneurs?
Yes.
How do you meet the needs of underserved communities? So can you talk a little bit about how the adoption of those new technologies have actually impacted your work?
Thanks. So now I'm going to touch on the 3 platforms we have. So many of you may be familiar with what was known as Connect to Capital. It's now CRF Connect. So we have 150 micro lenders and TA providers on that platform that get matched to small business owners across the country, usually programmatically, right? We're not advertising on Google to drive volume, but when we're doing work with sponsors, and this is across the country, then they're getting matched to CDFIs and to TA providers. And so that's one match, and that's driving capital to the communities we care about and the business owners we care about. That platform has been out there for about 5 years, and then we most recently launched about 1.5 years ago what's called CRF Exchange, which was initially used for a lot of public-private partnerships in terms of pandemic recovery programs, but it was built for SSBCI, which we all heard about yesterday. And we're up and running. We combine Connect and Exchange, and we're up and running in 7 states. So we're the lead platform for the state of New York, New Jersey, California, Washington, Nevada, and also Indiana and Wisconsin. And so what Exchange allows us to do, and is a facilitator and partner to many of you in the room who are participating in a lot of like loan participation programs through SSBCI, is that we're able to purchase the loans off your balance sheets and sell them off. So creating more capacity for you at the same time that we have a government compliant software program that is able to provide full robust reporting to the government and on any other stakeholder who's involved in a program. Our newest platform, which we'll be launching at OFN in October, but many of you know it because we're piloting, we have 15 micro-lending colleagues on our CRF Insights platform. So CRF Insights is a platform that has 3 use cases. One is built around creating better technical assistance platform so that you can better serve small business owners who are not able to get resourced the way they need to get resourced. So it leverages open banking through Finicity, which is a MasterCard company. But our team has written a lot of code on top of that to provide customized information to you all to better work with the small business owners who haven't been able to get kind of really robust information to think about how to manage their financials and plan their financials. There are also use cases around portfolio management and also use cases around providing outcome data instead of just output data in your program work. So we'll be going live with this in October, and we're really excited to say a lot more. The last piece I'll touch on, Donna, to also get at how we leverage these systems, and we worked closely with Sandy and our friends at Goldman Sachs in the city of New York. About 1.5 years ago, we were invited in to bring our Connect platform and our Exchange platform into the New York City Opportunity Fund, which is at the time was going to be a $75 million fund to reach underserved small business owners across the 5 boroughs. Mayor Adams made a big announcement as the largest public-private partnership in the city's history for small businesses, and we had thousands of hits on our website within 24 hours. We ended up having to scale up that program. We ultimately moved north of $85 million. The majority of the loans, like 70%, went to BIPOC-owned, women-owned small businesses across the 5 boroughs. 60% were in LMI census tracts. A large percentage were to immigrant-owned small businesses. So the city was, and there was just a big, Sandy was there, Patrick was there, I was in DC at another convening, but there was just a big convening 2 weeks ago because everyone loved how we were able to drive, and we had 8 CDFIs, many of you in the room, micro lenders across the 5 boroughs who were able to reach out, right? So these micro lenders are making the loans. Every week we're buying them off the balance sheet and put through our Exchange platform and selling them into an SPV that the city and Goldman Sachs financed. So again, just giving more tools to CDFI microlenders to drive capital where it needs to go through the technology platform.
That's great. You know, I'm curious as I listen to you, Matt, and just in terms of the planning, how you plan technology projects. Do you say, let's just sit and look at the whiteboard and figure out what those toolkits are going to be or what those tools are going to be, or does the demand itself from entrepreneurs, from other and underserved communities, has that served as a catalyst for you to look at new technology?
Super appreciate that question. I think like what we feel a little bit is our secret sauce as both a CDFI and a fintech, right? So Patrick's team, which is about 15 people on the tech side, they get deep immersion in community development finance, right? And they are spending a lot of time with our CDFI colleagues. We feel like you can't come at this just from the solution perspective. We have to hear firsthand from those in the field, what are the pain points, what are we trying to solve for? So we do that work and try and stay connected that way. That team originates and starts sourcing a whiteboard of like, here's our product roadmap of where we want to go. And we've actually just started to institutionalize a process to bring the rest of CRF into those conversations. So quarterly, anyone at CRF can be like, oh, what about this? What about that? So that's how we work the process.
Great. And what practical steps would you give for the CDFI representatives here today for if they say, you know, we want to do something as innovative as CRF is doing? What are the steps to get started in doing that?
So at the risk of sounding incredibly self-serving, I wouldn't. There are a lot of tech platforms. We're not the only one, right? So there's 2 things. Like we don't play in the core platform space, right? We're building add-ons that plug into your core system so that anyone who wants anything that we offer, it plugs in seamlessly to your core platforms. It's really hard. Like the core platform business is kind of there. But even for add-ons, there are a lot already there. And I'll just be frank, like it is not a seamless, no stress activity to manage a tech business alongside a CDFI lending business, right? The tensions of CDFIs, our lenders into the CDFI want to see really steady recurring revenues and surplus, right? And tech businesses are lumpier. So you have some tensions that do make it complicated. We feel like we felt that we've reached a good equilibrium. It's an ongoing tension though. And it does require, like, we're now at 15 and we want to really scale up, and we have great, funding partners who are allowing us to step up, but you have to have, and there's cultural issues, right? You're bringing in tech people who could otherwise work at Google, versus lenders who could otherwise work at Chase. And you got to manage all that again. We feel like we've reached a degree of success with that, and it's also a challenge.
Well, kudos to you. That's fantastic. We're going to move over to Sandy now, and full disclosure, I said that I'm afraid of technology, and yet I embrace it. And I think for us, for me, running Appalachian Community Capital, when I first started at ACC, I was looking for that button that would tell me where all the BIPOC small businesses were in the 13-state region. There was no such button. And so we said, we've got to figure out how to design and implement a system that will help our ACC members, because we are also a member organization, 35 members. How do we help them go deeper and farther into Appalachia, knowing that there are BIPOC small businesses, women-owned businesses, rural businesses that aren't anywhere near a bank or a CDFI? How do we help our members identify where those businesses are with some sort of interactive mapping as well as data analytics to help them, not only to do the outreach to those businesses, but also to strengthen the relationships between the ACC CDFIs and those small businesses that are in the region. And we were just thrilled when MasterCard Strive USA selected us as one of the awardees for a grant to allow us to expand. We started in a very small way, but the grant actually allows us to expand, to involve more CDFIs in that pool, that cohort. We're getting ready, Sandy, just for your information, we're getting ready to start our first steering committee meeting in late June. And so I'm really excited about it because, I certainly see the value of the technology itself. And we want to make sure that we're effectively using that technology. So thank you again for the ability to be working with MasterCard. So, from the perspective of everything that you do, Sandy, why do you think it's crucial for CDFIs to be involved in this space, and what do you think is going to be the future success of CDFIs with different types of technologies?
Sure, yeah. And thanks for the intro. I think that's a good sort of segue in terms of like who MasterCard is and why we're actually in this space. So MasterCard, as you probably all well know, we are not a bank, we're a payments network technology company. Our goal is to be able to move money as quickly as possible between businesses to consumers, from consumers to businesses, between banks, et cetera, so on and so forth. And so it's really a sort of an infrastructure company when you think about it in terms of being a payments utility globally. And so with that in mind, I sit at the Center for Inclusive Growth, which is a philanthropic arm of the company. And so with the strategy related to small business, which we call Strive USA, the goal was, can we mimic network infrastructure also within the CDFI space? Hence why we work with everyone up here. So with Donna's work around creating a data hub focused around climate on the Appalachians, which we know is historically and seriously disinvested community. The work that Matt is doing in terms of having this platform where multiple CDFIs can come onto it and access resources, information, data to better serve, scale, and access other tools that help serve their mission in delivering affordable capital. To the work that you're doing, Kelly, in terms of data and also research when it comes to AI, and also how do you actually inform regulators, right, who actually don't have that context and knowledge around it. All of that is very critically important. And there's several other folks in the room that we work with as well. So that's sort of been the intent around our work, and we're seeing some fruits bearing from that, and actually had really good evidence in terms of the approach during the COVID crisis, because those institutions that we had invested in, particularly with digital infrastructure, were able to stay open and actually pivot very quickly. I think right now, where we are sort of in the field and sort of in the US, it's a really critical time. I think like the future is now, AI's arrived, it's constantly evolving, it's gonna evolve much more quickly than other types of technology in leaps and bounds. And so with the massive amount of federal funding, which is a really once in a lifetime opportunity that we're seeing with GGRF, with SSBCI, with other types of funding as well, we really feel that the opportunity to actually invest in the field, invest in infrastructure is critical, primarily because this is really a moment to actually build sustainable infrastructure for the field when it comes to deployment of capital, information, and tools. The other piece is also, can we also actually build and strengthen the foundation of the field itself so we have a stronger house to continue to deliver the services and meet the mission in terms of greater opportunity and equity for people all across the country, particularly in low-income places. So that's why we feel it's so critical and so important to actually do this type of work.
That's great. When you are actually looking at CDFIs to fund, what are some of the criteria that you're using to assess their readiness and clearly their capability going forward? What do you look at? What's important to you?
Yeah, I think the important thing when it comes to technology and AI, data, et cetera, so on and so forth is like, it's an ends to a mean, it's a tool, right? And so you actually have to really focus on the solution and are the tools fit for purpose for you to be able to get there? So that's a question I always have. The other piece is just explain, we try to look at it from a network perspective. So is the organization actually going to have a network effect? Is this also going to apply to not just this institution in this geography, but is it also going to have impact on other institutions? Is it actually going to help lift up the field as well? And then the other thing I think we also do is also, does this provide proof of concept? Does it help validate something as well? So other funders could come into the space as well. That's also really important for us. And then from a brass tacks perspective, when we're looking at organization, is the board committed? Is leadership committed? They may not have the right resources when it comes to human capital at the moment, but does the plan actually address that as well, what they're putting forth? And then lastly, the strategic plan is so critical, so I always ask for that. And does this strategic plan actually include the impact around the technology infrastructure and deployment around it as well? So all of that is part and parcel around the evaluation, but all of those pieces are really important to have that roadmap, to understand the gaps around it, so you can actually plan very effectively and have the right impact that you're seeking to do.
And Sandy, last question. As a funder, how do you see the role of funders evolving in their support for CDFIs, especially, again, those CDFIs are saying, we want to do something innovative. We have innovative technologies that we're pursuing now.
Yeah, well, I think the role of philanthropy is really to de-risk innovation, right? So it's like, it is an output of capitalism. It focuses on maximizing return, sort of, Main Street does that. So philanthropy really has a role to actually de-risk the innovation and not be afraid to fail. So we've made a number of investments with folks up here that are successful, that are proving to be successful as well. But there's also investments that we made. For example, one of the big challenges you all well know is making referrals from a bank to actually a CDFI and having that being taken up and reducing the friction for the borrower, because it's always where you lose them. We made a couple of investments that just did not work. There are others, for example, actually CRF is doing a really good job in this space, so that's actually a really great example, but it took multiple times and different approaches to actually figure that out, and the commitment actually around it as well, so that's also really important. I think the other role of philanthropy is also, can we democratize the lessons learned as well? So one of the things you mentioned, Matt, it is really hard, it's really difficult. If you're a technology service provider, but you can also function and leverage AI and data to actually improve the tools you already have. You may not want to grow. You may want to just focus on your local geography, and that's all well and good. And there are tools that you can use that actually can enhance and better position you to deliver those services, reduce the friction, like reduce the overhead costs you have, reduce the cost of loan you have, and I think AI has a lot of potential for that. Whether it's around predictive analytics to look at the historical performance of your loan book over the last couple of years, and does that provide additional insights? Do underwriting around it. So how can you automate some of that so you can focus on higher value activities, which is where the human touch comes in. So there's a lot of opportunity to do different things, and I think the onus is on philanthropy to actually provide the tools, the resources, the channels to share those lessons, and so folks can actually all benefit from it as well. The other thing I would say, this is also where I'm really excited about what Harold mentioned, I think at the Open yesterday, around the CDFI infrastructure for scale. That would be fantastic, right? If all the work that you're doing, Matt, all the work that you're doing as well, Donna and Kelly, could be housed in one place and you have lessons learned that everyone can use, can go to, but also understand, here's actually what it takes for me to actually do a resource inventory of my current technology. Here's how to actually lay out the roadmap, and here's what it's going to take. And are there opportunities to back office some of this? So there's a lot of potential there, but it's really, I think, on philanthropy to also push that forward and continue to drive on innovation when it comes to that.
That's great. Wonderful. Great conversation, great, I saw say pearls of wisdom, again, from those who are already involved in this. And so I've got a couple of questions for anybody to answer, all of you to answer. Feel free to just jump in. First one is, how do you see the role of technology, particularly AI, evolving in the CDFI industry over the next 5 to 10 years? What does the future hold for the industry?
I can start, I guess. So, like I said, I think it's going to keep progressing over time, and some of the hype will go up and down, but we will see it. I think there are still technical bugs to be worked out, particularly on the generative AI side, but finding more ways to use it responsibly to really assist, as exactly Sandy said, really making sure that organizations can spend their time on the highest value activities and use technology where it actually leverages their resources and expands their capacity. So I think we're going to see that continue to grow. And then the other thing is continuing to learn more and really test those kind of bigger inclusion cases and how can we potentially go down that path. Particularly for the CDFI industry, the data, like I said, is a really key piece of it, and being able to potentially aggregate data to learn across institutions to gather some of those broader insights would be incredibly powerful. But there's some work that needs to be done to really kind of create the infrastructure for those kinds of inquiries to happen. So that's something that I think is, in potentially, hopefully, in that timeline, that we can really start to leverage this in more powerful ways that go, definitely increase efficiency, but also start to move the needle on broader questions in terms of scale, capacity, and inclusion effects.
Yeah.
So I would just build on both Kelly's comment and Sandy's comment insofar as, when we talk about it internally, I think the work for our sector, right, everything that's embedded in the large language models and AI today is a buildup of what humans have created with hundreds of years of systemic racism and bias, right? So it's just going to be incumbent upon us to continually interrogate what's happening and bringing that back and making sure that all of us are really leaning in when AI starts being used for credit decisioning and other things that really affect the flow of resources to those that we care about. So I think that's really important. And then also, like I said, we sit on with our platforms thousands and thousands of transactions, and we know we don't have enough to actually build models ourselves. So I think the opportunity for our industry to come together and start aggregating that and informing how we can, again, best drive capital and resources is going to be a big task for us, but I think it's going to be a really important one.
That's great. What do you think? Go ahead, Sandy.
Just one thing. I think like the opportunity around like data and AI and technology and digital tools, all of that. Does that also lead to greater cooperation and sort of interoperability when it comes to folks working together? And maybe it's around APIs or like no code integrations as well that don't have a lot of upkeep related to it. But is there a way that technology would enable folks to actually work together? Because the moment right now really requires cooperation. Because not one institution here, not even CRF, not Momentous, anyone can actually go it alone around the delivery and the task that is before us when it comes to all the federal funding. There's significant opportunity, but there's also significant risk. So to address that, I think it really requires like concerted effort to be intentional about working together and making sure your systems on a technical level are also able to actually talk to each other. And there are ways to go about doing that. And I really believe things like open source technology where you own the code is public, you're able to make edits to it, change it, it's network and technology agnostic, is really powerful and a really powerful way to actually move forward. So that's, I think, also a potential pathway in the future when we think about what's next.
That's kind of infrastructure.
Yeah. I mean, you talk about the risks, to be aware of those risks as well, not to shy away from them.
Yes.
When you're in an industry that is as multifaceted as the industry is, I mean, what would be the advice of this panel to the CDFIs to say, if they were to say, well, how do we integrate this new technology? What are the challenges we need to be aware of even before we move ahead? Thoughts on that?
I'm sorry.
What are the challenges? If a CDFI were to come to you, Matt, and say, you know, Matt, I got a great product. I have worked on this thing for years. What would be the advice you would give that CDFI in terms of, you need to be aware of some of the challenges as you work to integrate those new technologies into your organization? Here are some of the things you need to be mindful of.
Yeah, I think it's really understanding the whole onboarding process of the tech and making sure that it's just really aligned, mission aligned with who you are, and aligned with what your resources are to implement, and really trying to get and sending again, we've constructed our systems to be API plugins to core systems, and whoever you partner with, I think you just want to have that as seamless of a lift and make sure that you're getting training from folks who know the sector and are going to be sitting side by side with you to help you in your journeys.
Great, wonderful.
I would just say, don't focus on the shiny object. Technology is cool, I love it, I think it's awesome, but also it's a means to an end, and I just can't emphasize enough. And does it actually fit within your own strategic plan? And is this tool going to achieve what it needs to do? And also, does the long-term cost to it also align with efficiencies that you're creating as well? So you have to keep all of that in mind. And also, are there other gaps that may be a priority? So actually, it's a shiny object, but also keep in mind that focus on the solution and the integration is really, really important. The other thing I would say, cybersecurity is really, really, really important. It's important right now. I was just listening to the news earlier today when I got up, and they were talking about so many hospitals have had ransomware attacks where they shut down all their systems and resources, and they have to pay a ransom to actually unlock all their data tools and service delivery. So it's that's also something really important to focus on. And there are off-the-shelf tools and products you can access to actually address some of that. But I would say that would be something foundational to just initially focus on. We talk about technology and data because you're also opening up additional pathways.
Can I jump in?
Yes, Kelly.
So we had a panel yesterday where we were talking about technology adoption and some of the challenges, and we're going to put up some worksheets that we have been working on as part of our research project about just all the things to think through, really mapping any one innovation into your broader, kind of technology architecture, thinking about it from a change management perspective, thinking about vendor vetting and all those kinds of questions. I think that applies whether it's machine learning or not. But I do think when it comes to kind of some of these cutting edge technologies, some of the things that you really want to think about is really what's going into that system. What's the data quality, and are there risks or blind spots in that information? You want to do testing on the outputs so you really understand what you're getting back and how it's changing your outcomes. You really want to think about the human overlays because the model just doesn't run by itself. People then take that output and make decisions with it. So you need to think through how does that work, and are we relying on the technology too much or not enough, and how do we really think through that? And in places where it is more customer facing, if you have a chatbot or something else, you also have to really think about how is the customer interacting with this and viewing this. And then I think the last thing is really, again, just continuing to think about where are the risks and how do we keep monitoring over time so that whatever you put in place, whatever you do in terms of output testing up front, you come back to it and you see where have things not gone the way we expected, where are the breakdowns, and really making sure that, that we're kind of always, monitoring and really thinking through these new systems to make sure that they're really living up to their potential and to the benefits that everyone wants to see, and that we're managing the risks that can come along with it. So.
Right. What I've heard from each of you is that this really is a journey to manage expectations, to understand that technology is a wonderful thing, but it can't do everything. There is this part that we all have to play along the incremental milestones of any sort of technology project to make sure that it really is not only meeting the organization's needs, but ultimately the needs of the customer, who we actually serve, who we support. So this has been a great conversation. I am less afraid. I'm less afraid. I'm ready to move forward, and I hope that everybody else has been too. Thank you again. Thank you for staying until the very end of this conference, which has been great, fantastic. I hope that everybody gleaned something important, as we always do whenever OFN has a small business forum. We'll see you all hopefully in Austin, Texas next year. And, uh-oh, did I spoil the surprise?
No,
Okay.
So let's give a round of applause to the panelists.
Here we go.
You're good. So that's a wrap. But really quick, so thank you all for joining us for this incredible event. Really, everyone in this room is what makes this event so special. Gathering so many passionate, smart, innovative, and caring individuals yields amazing results. I know you've gained valuable insights over these past 2 days. So now we need to take them back. Take back what you learned and put it into action. Use it to streamline your lending processes, explore innovative technology platforms, and prepare for opportunities in climate finance. Use it to develop new loan products for small businesses, advocate for policy changes that would benefit small businesses and entrepreneurs. But most importantly, use it to drive positive change in your organization to serve the communities better that you serve. A special thank you to our more than 100 speakers. Your knowledge and insights have been invaluable. You've equipped us with the tools and inspiration to tackle the challenges ahead. Thank you to Tristan and Alex, who have been our ASL interpreters all week. We are in an unprecedented time for our industry, and we will rise to the occasion as we always have. This is our moment. We are made for this moment. Together, we have the strength, resilience, and commitment to overcome any obstacle and create lasting positive change. Chicago has been our home for the small business finance for a long time, and it is time to go to someplace new. So I'm excited to announce that the 2025 Small Business Finance Forum will be held in Austin, Texas from June 11th to 13th. Yes, anyone Texas here? All right. The 2026 forum will also be held in Austin, and then we'll look to host a new city in 2027 and 2028. So if you want to advocate for a future SBFF location, now's your chance to reach out. Later this year in October, we're having a small gathering in LA. It's our 40th conference. It's going to be an amazing event. We're really looking forward to it. The call for sessions closes next Friday, and we anticipate launching registration in early August. Make sure to register early. We've reconfigured the agenda structure to accommodate more attendees, but we are still expecting at least 2,500 people. So, thank you very much for coming to Chicago. Looking forward to seeing you in October in LA. So please, safe travels back home. Thank you all very, very much.